Yo, what is going on YouTube? I am Germ here. As you guys can see up on the screen today, I want to talk a little bit about Fsly Incorporated. This is ticker symbol FSLY. This is another very popular kind of smaller cap growth stock that some people are very excited about the future prospects of them. They're one of these companies in the cloud computing industry. People see this as a very futuristic and very prominent industry going forward in the future that's just going to become more and more popular, more and more useful, more and more just kind of like a lot of the big companies going forward into the future are going to be either using this or selling this, or that's just going to be a very impactful industry. But obviously, as you guys can see up on the screen today, stuff did not go that well for Fsly. They did record their Q4 earnings, which we are going to go over in this video today, but they were down 2% during the day, kind of just a normal down day, and then they actually went up after hours for just a second before crashing down. So we just need to talk about what happened and maybe what the future has in store for this company. So definitely drop a like if you guys do enjoy this video. I would appreciate that so much, and subscribe to stay up to date on all my latest content. Obviously, as always, there is no financial advice being given in this video. I'm not telling you guys to buy, I'm not telling you guys to sell or do anything like that. I'm just covering the news, covering some stories, giving my thoughts and opinions, and every once in a while talking about stuff from my own kind of personal investment perspective. But hey, do your own research. If you think things are interesting, dive into it yourself, make your own decisions. With that being said, let's get right into this. So Fsly is an interesting company. Again, like I said, you can see here, an American cloud computing services provider. It describes this network as an edge cloud platform, which is designed to help developers extend their core cloud infrastructure to the edge of the network, closer to users. Again, sounds really cool. But year to date, this stock, not been doing so hot. It's down 20%. That seems like a huge amount, and it is. But when you look at the broader market, when you look at a lot of individual stocks, especially smaller cap stocks, especially stocks that are not profitable, especially companies that are, again, more forward looking, more growth dependent, all these things, just the environment we're in the market and in the economy and in the world, a lot of these stocks haven't been doing so great. Down 20% year to date isn't crazy. It's not, I'm not like shocked to see this when I went to this, but some of the stuff that is a little bit more shocking is when you look, a little bit further out. 1 year, February 17th of 2021, we were at 94.85 for this stock, and we are 69% down from those days, and obviously that's without even factoring in this after hours crash down to 21 that we've seen today. This is going to be a new 52-week low for Fsly. So if you were somebody that loved this company at 90, 80, 70, 60, 50, 40, 30, whatever, maybe this is potentially a time to get in, buy the dip, whatever. But let's even see what's going on. Obviously today for the market as a whole, kind of a weird day. Dow Jones down a little, S&P up a little, Nasdaq down a little, Russell up a little. The indices were all over the place. They couldn't really decide what was going on, but the stock market did decide what was going on with Fsly in a big way. So here we have Fsly stock from MarketWatch.com. Fsly stock plunges after forecast calls for bigger 2022 growth slowdown than expected. That is not what you want to hear, especially for a growth company, especially right now in these current market conditions. Cloud software company misses on a full year sales forecast. Not great. Stock falls nearly 25% in after hours trading. Again, not great. But let's see what actually happened. So Fsly shares plunged between 20 and 25% in after hours trading Wednesday after the cloud software company predicted 2022 revenue growth would slow down more than analysts expected, and I'm sure a lot more than many investors and shareholders would have liked. A software company that helps post content online reported a Q4 loss of $57.5 million or 49 cents a share on sales of $97 million, up from $82.6 million a year ago. There we go. So hey, revenue is up at least. After adjusting for stock compensation and other causes, the company reported a loss of 10 cents a share, a worse performance than the loss of 9 cents a share in the holiday quarter last year. So hey, year over year, they're losing more money than they did last year. That's not a great sign, but hey, if you're a growth company, it doesn't always matter that much, where your short-term EPS is. Again, obviously you'd like to see EPS getting better year over year, but not the end of the world necessarily, especially if people weren't expecting you to be profitable or anything like that. But what is interesting is that analysts expected an adjusted loss of 16 cents per share on sales of $92.5 million. So the company beat on their sales expectations, at least from analysts, They also beat on their EPS. You know, they lost 10 cents a share, and analysts were expecting them to lose 16 cents a share. So in some ways, this fourth quarter was pretty damn good. Hey, we lost less money than people were expecting. We not made more money, but generated more revenue than people were expecting. You know, this seems like, hey, maybe the stock should have traded flat. Maybe the stock should have even went up. Where's the bad news at? You know, after executives forecast a loss of 16 to 19 cents a share on sales of 90 to 93 million, shares still plummeted to less than $23 in after-hour trading after closing at 28.93. However, as the company predicted, growth would slow down in 2022. Fsly predicted full-year adjusted losses of 50 to 60 cents a share in 2022. You know, not great. Along with revenue of 400 to 410 million. We can go to Qualtrim Insights and look at, you know, what we've kind of been looking. I don't have all the 2021 full year numbers up yet, so I don't think we have that at this time on Qualtrim. But yeah, analysts on average were predicting adjusted losses of 49 cents. So again, they are you know, predicting bigger losses than analysts were projecting, and the sales seems right about in line. Analysts were projecting $417 million in sales. They're projecting a little bit less. So, you know, I don't think it's that impactful, but they for sure did lower sales expectations and raise losses, which not a great combination. Even though it's only by the slightest of margins, it's still, hey, we're hoping for beats. We're hoping for, you know, getting closer to profitability. We're hoping for revenue growth. If revenue is slowing down, if expectations are being lowered, if we're worried about the future and we're uncertain and stuff, this is where obviously investors are going to be worried. At the midpoint of the 2022 guidance range, Fsly would grow 14.3% after growing 21.8% in 2021. So again, that is growth slowing down a lot. And when we look at Fsly right now, obviously they don't have a PE ratio on them. The price to sales is 9 and the forward PE is 769. And if you're only growing revenue, you know, 14.3%, that doesn't necessarily justify a lot of those numbers. And that is why, you know, the stock is starting to tank a little bit. It's starting to give up a lot of the gains that it previously had. So Fsly stock has made a habit of huge declines after earnings. The stock declined after quarterly earnings for 5 straight quarters. That's crazy. With 4 of those declines by double-digit percentages until it broke that streak with last quarter's report rising 2% the next day. Fsly shares are higher than the $16 price that commanded in the company's IPO, but well off the heights that followed its public debut. Because yeah, I mean, if you zoom out on this thing, it's crazy. All-time highs of like what, 127 almost dollars, and right now we're at, I think, 21 after hours. Yeah, right now we're at 21.49. Such a huge drop off. And again, I totally understand why. You know, when I look at this company in a lot of ways on Qualtrim, yes, revenue has been growing, but hey, we're seeing a little bit of a slowdown up here. You know, revenue growth has not been as crazy over the last couple quarters as it was previously. EBITDA looking really rough, kind of declining, way negative, you know, not so great. Free cash flow in the negative. Yes, they do have cash, which is great, but they have more debt than cash, not a great sign. Shares outstanding are increasing. EPS is negative, and yeah, we were maybe getting a little bit closer to, you know, profitability, but now it seems like we're taking a big step back there, and net income is just very far in the negative. You know, this company, at least, you know, just looking at the fundamentals and financials and stuff, doesn't scream like an amazing company to me. Doesn't scream like something that I absolutely need to own or absolutely need to get in on, especially when there is so many awesome opportunities out there in terms of cloud computing and different offerings like this. And there's a lot of companies that have, you know, dumped well off their 52-week highs as well. So when I think about it, you know, yes, you know, Fsly is way off its 52-week highs. Yes, I do believe in buying the dip. Yes, I do believe in buying low and selling high. But this isn't necessarily one that I'm picking up anytime soon, I don't think. But that is pretty much it for this video today, guys. Definitely drop a like if you did enjoy it. I would appreciate that so much. Leave a comment down below. Let me know what you think about FSLY. I'd love to hear your guys' thoughts and opinions. Subscribe, stay up to date on all my latest content. I hope to catch you guys in the next one. But until then, peace.